Hello, there's something for everyone in the SingTel annual report. And if you're one of the tens of thousands of shareholders who's going along or potentially going along to the AGM on the 25th of July, you should read it because there's quite a lot in it, both in terms of the company strategy as well as the industry assessment, which you would expect in any annual report, but also some very detailed specifics about CEOs' earnings as well as corporate governance and corporate and social responsibility initiatives. In fact, there is a separate sustainability report, separate from this one, that you can read as well to see how one of Singapore's largest companies is in fact faring in various benchmarks. But for now, let's turn to the Group CEO's statement and read what Chua Sok Khung has to say about the future. The problem, as she says and has said in previous annual reports, is not that people don't want to use their mobile phones. The problem is that they want to use their mobile phones so much that SingTel needs to find a way to monetize that, both in terms of the infrastructure that it provides to allow you, for example, to surf online or read emails or do all the other things that you do using your smartphone, but also to take advantage of those digital trends itself, not just provide the network, but actually provide the other services that add value to the network. So those two messages really permeate the entire report. How is SingTel, transforming itself from being, quote unquote, just a telco providing the network in order to fully maximize the internet age that we all live in? There are some specific comments in the annual report too, which will interest investors specifically. For example, the commentary in relation to capital expenditure. So having already mentioned that a lot depends on SingTel being able to monetize its network, it obviously also needs to continue to invest in that network. And it has. Chua Sok Khung saying that across Singapore and Australia, the two main operating markets, SingTel has invested 2.1 billion Sing dollars in 2014 and expects to spend around 2.3 billion in the next financial year, presumably the one that we're already in. So more investments in infrastructure on the way. So that need to keep transforming and continue to make more money off people using their networks to surf the internet is obviously increasing. There's also some very interesting commentary about the so-called OTT providers. OTT stands for over the top and refers to companies that market, for example, various television channels using infrastructure that rides on the SingTel network. For example, SingTel Mio is its own pay TV system, but there are other companies that can provide services like SingTel Mio that use SingTel's network to transmit those movies. So, in theory, they are a competitor to SingTel, but SingTel is saying that they're looking to partner them. In essence, SingTel says that they're exploring various business models that will bring benefits both to the OTT providers as well as their end customers. That's fairly vague, but it obviously shows that there is some effort at cooperation going on. Chua Sok Khung goes on to say that her aim is to become the preferred network partner to customers and OTT providers alike. So, once again, the network is important, but so are their own value-added services, even if they are competing with other people who use that network. Moving on to the financials, and we turn our attention to this particular page here. This is page 7. And what you'll find there are some of the key numbers that SingTel has reported. These now, being in the annual report, are the audited numbers. And what we are finding here in all of the financial statements, what you'll find again and again, is the issue of currency translation. In other words, how currencies fluctuate against the home currency of the Singapore dollar makes a big difference to the financials. Because after all, SingTel derives so much revenue from parts of the world outside of Singapore. We'll explore that in a minute. But we can, as I said, find traces of currency translation issues throughout. First of all, here's the net profit number, and you can see that the 2014 bar is slightly longer than that for 2013, 4.1% increase to be precise. But if we were to strip out the currency impact, you could see that the increase is actually more like 10%. So largely because of the weakening Australian dollar against the Singapore dollar, Australian earnings translate into fewer Sing dollars. And that's where that gap between the 10% increase and the 4% increase come in. We also see that on the revenue front, but for that we need to turn to page 94 and this fairly complex-looking page. Let me break it down for you, though, and refer just to the top part there. Group Consumer, Group Enterprise, and Group Digital Life. You can see in the columns on the right that there have been some moves. You can see group consumer down 4%, but in home currency terms, it's actually down 10%. So you can see once again that once those earnings from group consumer are translated into Singapore dollars, the declines are much greater. In fact, overall, group revenue is actually at a more than 5-year low. Still $16 billion, it's still a lot of money, but obviously the currency translation has had a significant impact. Enterprise, we also saw an impact on a constant currency basis. The revenue would have been flat, but with the currency translation it was down almost 3%. Group Digital Life is an interesting one because there's a more than 50% improvement in the revenue, but at around $170 million in Singapore dollar terms, that's still, as you can see, just a very small part of their total group revenue. And I'll come back to the Group Digital Life business in just a few moments. Let's drill down a little bit further, though, into the various aspects of the revenue. And you can see here, page 95, where they've provided this table, which shows you what the various products and services are on the left. Then you can see the change in percentages. So once again, these are changes taking the currency translation into account. And without looking at any particular line item, you can see that the top part of that table is all negatives. So they had declines in most of certainly their important parts of their businesses. Right at the top there, mobile communications, down 7.5%. Data and internet, still a $3 billion revenue figure, but down 8.5%. Next, we had managed services, down 2.5%. National telephone, still a $1 billion business, but down 13%. And their sale of equipment, still a $1 billion business, but down 16%. So you can see that's quite clear as to, one, that not all parts of the business are doing well, mobile in Australia in particular, but two, once again, the currency impact. There is 2 line items here I want to drill down further into. One of them is managed services, worth $1.7 billion almost, and business solutions, worth around $600 million. The additional commentary from the annual report says that the order book for both managed services and business solutions remains strong at $2.1 billion at the end of March. That certainly sounds like a lot. It is almost, not quite, but almost the entire figure from last year. The problem that I have with this number is that it doesn't give a time frame as to when this order book is actually going to be executed. So on the one hand, it shows that obviously the numbers look like they're going to hold up, but on the other hand, we just don't know whether it's going to be over the next year or subsequent years. On to Group Digital Life. And there's a substantial part of the annual report devoted to it, possibly because this part of the business gets the most questions. There's no denying that SingTel's still makes most of its money from providing the various networks that they have, for example, their 4G network and so on. But because they've indicated in that transformation program that they want to actually provide the services that add value to their networks, that's obviously where a lot of the questions have come up. SingTel's committed itself to investing $2 billion in various technology companies that might help it get there, although Chua Sok Kung points out in her statement that with valuations currently being very high, perhaps they'll be particularly prudent not to be paying too much for some of those investments. But anyway, because Digital Life is one of those growth areas, part of that transformation, they get a lot of airtime in the annual report. Case studies, for example, of advertisers who've used their Amobi service, for example. And what we then find is a lot of nice pictures and description of what actually happens. What the business impact is, for that, we turn to page 93. The page on the right here, and the breakout. Group Digital Life achieved strong revenue growth of 52%, with Amobi delivering a significant increase in mobile advertising revenue because of those customer wins I just mentioned. So 52% increase. Sounds good, looks good. But they go on to say that the ongoing startup costs and higher investments in their various digital businesses, in fact, they've just recently announced some more, which are not in the annual report. Look at the SGX website. As a result of that, their EBITDA loss remains at $170 million. So perhaps more questions that will come up at the AGM as to when these parts of the business are going to become meaningful in terms of revenue contribution and, of course, profitable. Now on to another part of the discussion. We've talked a lot about the various business units that SingTel has, but let's now talk about the countries that SingTel is in as well. Many countries, in fact, 10% increase in subscribers over the year before. So SingTel is really no longer just Singapore Telecom. It's very much a regional, you could argue a global telecom. We'll come back to that. But for now, let's take a look at page 89, where we can see the income statement. And there you can see group operating revenue down from 2013, where we see SingTel growing a little bit, but Australia's Optus coming down quite markedly from more than 11 billion to less than 10 billion. In Australian dollar terms, that difference is actually much narrower. Once again, currency translation is the problem for them here. On an EBITDA basis, though, in terms of profitability, this is also where it gets really interesting because, as you can see, SingTel increased profitability, Optus just a slight decrease in profitability. But here, the currency translation also masks certain cost efficiencies. And what we can actually see that in Australian dollar terms, Optus actually improved its profitability. So once again, that improvement was then negated by the currency translation. But Optus did make significant cost savings, which, as you can see, flowed through to the bottom line. The pie chart on this page shows you exactly where the earnings are coming from. That red part is less than 1/4, 24% to be precise. That's Singapore, just that red part. The grey part here from, you could say, 3 to 7 p.m., that is about a 30% contribution, and that's from Australia. The other 45% are the regional associates, their stake in AIS in Thailand, which switched on its 4G network last year, Telkomsel in Indonesia, and Bharti Airtel in India. And so you can see what importance the regional associates now make. Once again, currency translation will factor in. But, you know, on the one hand, SingTel can't grow regionally without, on the other, incurring some currency risk. That's quite obvious, as you would expect. And so when we look at the commentary, the associates' pre-tax contributions would have grown 13% if not for the currency translation. With that incorporated, it was a 4.5% growth. But that's a $2.2 billion contribution that SingTel wouldn't have if they didn't, you know, venture out into the region. Mobile data was in particular a contributor. Earnings growth there led by Airtel India. On to the cash flow statement, which is always of interest as well, because cash is fact. You can't argue with cash, and here's the free cash flow numbers. Group free cash flow down on last year. Singapore, one of those declining, as did Optus. But the associates' dividends actually returned to more than $1 billion. They took a breather last year. In prior years, they contributed more than $1 billion. They're back at $1 billion now. And the cash flow obviously is of interest to the various investors in SingTel all around the world because arguably, they're looking to get that cash paid out to them. And this is how much cash they paid out. You can see here a shareholder payout, $2.7 billion in 2014, same as the previous year, and ever increasing in years in the past. One more thing to point out, and that is some of the directors' remuneration. And here's a page in particular, page 67, devoted to how the Group Chief Executive Chua Sok Kung is remunerated. And you can see it broken out down to the last dollar. And while, you know, if you're particularly interested in that, you'll want to pay particular attention to that page. But really what that highlights is just how transparent SingTel is about these things. And unlike other companies that we see on the Singapore market, which just report in ranges, in bands, SingTel actually spells it out right down to the last dollar. Whereas there's also some commentary about the directors on this page, page 63, where they propose that the chairman will receive an all-inclusive fee of $960,000 plus car-related benefits, and will not receive any other payments for attending board meetings and so on. 1/3 of that $960,000 will be paid in SingTel shares. Apart from that, there is no change to the director's fee, and that's highlighted here. The director's remuneration framework stays the same as it did last year, the amount less than $3 million. The shareholding structure, one final point, and we find that here on page 71. I always find this interesting to look at because it tells you who actually owns the company and where they are. Temasek, 52% shareholder, is that the blue bar on the right side. But the other parts of the shareholding structure are also very interesting because they highlight with US and Canadian investors making up 17% and Singapore investors apart from Temasek another 15%, with European investors 11%. You can see just how international SingTel is, both in terms of the shareholding as well as the businesses that it's in. So that's a quick wrap of the SingTel annual report, the annual general meeting, 25th of July, 3 p.m. at Suntec City Convention Centre. In the meantime, if you're planning to go, please be sure to read the document for yourself.